What's going on, guys? Welcome back to another video. In this video, we're going to be talking about how Palantir's lockup period from its IPO is fast approaching and the lockup period is almost over. And I'm going to show you a couple of strategies and ways to help protect your position or some new positions that you can get into as well. Now, if you enjoy this video, please go down and hit that like button and hit that subscribe button and turn on that notification bell so you're never late on any one of these videos that I put out, and you can stay up to date on all of your favorite stocks and maybe even learn about a couple of new ones. Now, if we go over here to this article, according to Business Wire, the lockup period is expected to continue until the start of the third trading day following the date of public disclosure of Palantir's financial results for the year ending December 31st, 2020. That essentially means 3 days after their earnings. Now, I've seen a couple of other videos that have said that the date that their lockup period expires is December 31st, and that is just not true. The predicted earnings date for Palantir at the current time is February 11th, so that means that around February 14th is when this period will be ending. Now, what exactly is a lockup period? So essentially what it is that a lot of the C-suite individuals and high-level employees and investors in the company have been granted shares as part of their payment package or from their investment. Now, when the company IPOs, a lot of people on paper usually make a boatload of cash. Now, they're not allowed to sell these shares because they own a large chunk of this company. And if they were to sell all of their shares and liquidate their positions on the IPO day, that would create some insane volatility and the price of the stock would fall through the floor due to basic supply and demand principles, because there's not going to be enough demand to buy all of the shares that these people want to sell. But after this period ends, these people will be able to sell their shares, and that's going to create an interesting scenario for Palantir coming up, and a lot of people are going to expect the share price to fall. Palantir has had an incredible 2020 year. About 50% of their yearly revenue comes from government contracts, and we can see this year that they actually received $175 million in government contracts. Now, that's pretty amazing for this company, and we can see from the share price that all of these contracts are getting reflected in the actual growth of the price of the company, since it went from about $9 to about $30 at its high. Now let's take a look at some of these contracts really quickly. So this one was Palantir wins FDA contract to power drug review and inspections. Now this basically was for the FDA and the Oncology Center of Excellence to use the Palantir software to integrate and analyze data. If you didn't know already, basically what Palantir does is it takes data from all of these big companies and organizations, and the companies have a specific problem that Palantir is supposed to solve. Now they take all of this data and model it out and give the companies a very specific and succinct solution to all of these problems that they may have in any given situation. Now, Palantir was also part of Operation Warp Speed. As we can see here, they were included in the coming up with possible treatments and to monitor the safety of line items like hand sanitizer. If we take a look at another one of these contracts, this one was with the U.S. Army, and the Army Vantage reaffirms the Palantir partnership with a $114 million agreement. Now, this contract was pretty interesting. It was guaranteed for one base year in 2019, and the whole contract was worth $458 million for 4 years. Now, they were given $110 million at the time, but now in December 2020, the U.S. Army liked the Palantir services and solutions so much that they decided to renew this contract for another year and grant them about $114 million. Now, this is great news for investors, because if such a large organization like the United States government trusts Palantir with all of its data and its ability to make very sound decisions and help them with all of their problems, then investors should have a lot of trust in them too. Now, not only has Palantir gotten government contracts from the United States, but we can see over here recently they were granted a $31.5 million deal with the United Kingdom's National Health Service. Now, this was essentially to help with the operational rollout of the vaccine program. Now, this is very important because they're going to use all of this data most likely to determine how to get the vaccine out most effectively. In order to do this, they need to figure out who the individuals are that have the highest possibility of contracting the illness and having very bad symptoms. And they will also use the software and systems to monitor and collect data to determine how to allocate health and care resources in emerging hotspots. As we've seen in New York, a lot of the hospitals and ICUs are getting overrun and they're running out of supplies and PPE equipment. This software will allow all of these health networks to better manage all of the different equipment that they're bringing in, as well as sending patients into the places that have the capacity in order to handle them. Now, if we go over and take a look at the chart of Palantir over the past couple of months, we can see that it dipped down to around $8.58 or $9 about on its IPO, and then absolutely went on a moon mission to about $30, came back down, came back up, and has been settling in around the $27 mark. Now, this was really the result of all of the new contracts and how well they have performed throughout this year. Now, they had a little bit of a pullback, and it wasn't really the fault of Palantir at all. It was literally just some bank downgrades. This company tripled in the past 2.5 months, and the big institutions had to come out and say that this company was a little bit overextended in terms of its stock price, but fundamentally, this company is doing absolutely amazing. Now, if you have a large position in Palantir and you bought it at the very beginning, you might be getting a little bit worried about this share lockup period expiring. Now, there's a lot of different ways that we can play this, but I think the best option for this would be to make a zero-cost caller about 2 weeks before this lockup date expires, and maybe have it expire a little bit after, maybe 2 weeks. Now, a zero-cost caller is essentially selling a call option against your shares, and for doing that, it's essentially making a covered call play. Now, you receive a premium for this, but what you're going to do with that premium is you're going to go and buy the same amount of puts for the same price. So it creates a little window in a little collar so that your max gain is now capped, but so is your max loss. So you know that you are going to stay in a certain range in terms of your profit. Now, that's going to be very important, since if your collar was maybe a 26 to 29, you know that the most that you're going to make is selling out at the $29 mark, but you know that your max loss is going to be however much shares you have at the $26 mark. Now, this is going to be a very safe play. It's very conservative, and it may not be for everybody. If you do want to do something a little bit more risky and you don't have shares in Palantir, you could actually buy a strangle on Palantir, which would involve buying a certain amount of calls and then buying the same amount of puts, so you have upside potential as well as downside. Now, in order to make profit on that type of play, you're going to need one side of that two-legged option to go up 100% or more. Now, that's going to be it for today's video. If you guys enjoyed all of this information I had for you guys, please go down and hit that like button and hit that subscribe button and comment down below if you own a bunch of shares of Palantir and if you're excited about what 2021 has to offer for this company.